Just doing a quick sound check. Yeah, I am talking. I just that's concerning. Welcome everyone. Can you hear me okay? I was not getting any sound on the other channel. Just give me a sound check here. So is there no sound? I'm showing that there should be sound. Okay. I got a new sound set up. I tested it. I thought it would be okay. So that's not good. How about now? Is that any better? Are we getting any better there? Sorry about the delay, folks. Very low. Okay. Yeah, I've got everything up on full. So can we hear the voice? Can we get any sound? It's just still very low. Okay. Well, we're just going to go ahead and get going here, folks. Thanks for coming. And yes, we were delayed because of the game. There was no way to end that game, and unfortunately, the Chiefs won. So, okay, so that's good. All right, folks. We've got a fair amount to talk about tonight, and the primary thing that we're going to be looking at this week is, of course, going to be the Fed, and the futures are rallying right now. And someone asked, why are they rallying? Well, this is short covering ahead of the Fed because uh, there's so much. If you look at the dialogue that's out there on the street right now, what you're going to see is a lot of folks talking about they're going to backpedal 2018, those type of things. I don't think if we look back on 2018 that we actually had something like the inflation monster that's chasing them right now. But the point of all this is that they're not going to change anything. They're going to probably keep the same dialogue. They're going to do their best to soften what's going on here, and that's going to be the basic dialogue here. We do have, a fair amount of stuff coming out other than the FOMC meeting, and I'll talk about that more as we go through the week. And hopefully, I'll figure the sound out a little bit better. I'm not sure why it's not coming through better, but anyway, let's just keep moving on here. Sorry for all the delays and everything, but we look at back in last week. What a horrible week! S&P down 5.7, Nasdaq minus 7.6, and the Russell down 8%. So definitely a big week on the downside, and one of the bigger weeks we've seen for a while. And we traded down, and I talked about this on the last couple videos, is that we traded down toward the 200-day moving average. We're able to close under it on the S&P, and we've been, I believe, 4 or 5 sessions now below it on the Nasdaq. So bear with me 1 second, folks. So what we're looking at here, as far as all of the markets, they're probably going to correct. We have 1 week from the monthly close, which will be a week from tomorrow on Monday, and that's going to be a really interesting close. I'm actually doing a separate video. I talked to you a little bit on the live stream on Friday that one of the things that I was looking at was that we got that outside reversal bar that we got on the cycle high on the weekly on the 7th of January, and that's continuing in unfolding. But there's a bigger pattern. I'm not going to discuss it. I have talked about this pattern evolving from a weekly to a monthly and maybe to a quarterly, but I'm going to do a separate video. It should be maybe an 8 or 10 minute long video that unpacks that situation in great detail, and I'll be able to do it in a production environment rather than a live stream. But as we come in to this week, it's going to be about the Fed for sure, but we've got a fair amount of stuff. We're going to start seeing some of the PMI start to come out. And one of the things that I talked about for several months that I thought the economy would start to stall a little bit, and it definitely is starting to show signs that it's stalling. And the overall patterns, though, are still somewhat bullish. And that's going to keep that. This is talking about the economy now. That's going to keep some underlying sense that everything's still okay. And I think Powell will play into that on Wednesday when he does his conference. But we look to this week. We've got PMI coming out on Monday. Tuesday, we have consumer confidence. That'll be looked at pretty good. Expected to be 110. That's what it was last month. Expected to be around the same. If that comes in a little lower, that might have some issue. And then we also have the home price index coming out, looking to be about 1% higher month over month, continuing to see that inflation happening in the housing market. And Wednesday, then of course, FOMC, that will be all the focus, and we'll talk about that. We'll have opportunity for the most part in our live trading room for folks in that to discuss that. So we'll make sure we kind of organize this week around some of that market activity that will be there on Wednesday. On Thursday, we're looking at the claims coming out. They've been increasing the last several weeks. Folks are expecting them to downtick. If they continue to increase like they have, it's been $40,000 claims coming in. That's going to push it maybe closer to around 285. The consensus out there is 265,000 new filings. Continuing claims upticked as well. And I'm just thinking, what if that got back above 2 million again? We're at 1.635 last report. So let's just see what happens with some of these numbers and see if they start to tick up a little bit. There's just a lot of folks that are out there that are really still quitting their jobs, and that is still kind of one of the primary underlying tones that's going on out there. And then we get to Friday, and we're going to see the PCE numbers. So we're going to have some inflation numbers on Friday. And, some folks are starting to think that maybe that we're getting a stalling of those numbers, and that we're not going to see a continuation of the inflation increasing. And we may not, but I still expect it will stay at a very elevated level, and we're not going to get a lot of reprieve. There's one of the other things that we looked at, and I've been telling you for a while, that the interest rates aren't what are driving the market, because we finally saw, and I talked about this on the Friday stream intro in the final hour, as was a safety bid coming into the 10-year. So they pushed them down to 174, basically 175. And I'm expecting to see them rebound back toward 179, 182. We got, and I'll go through those details as well. Meanwhile, the yield curve continues to flatten. So that's a real issue out there as well. The other thing that we have to deal with this week is going to be the earnings. We've got 433 earnings. This is the biggest week so far. Tuesday, we have Microsoft, and I believe that's after the close on Tuesday. Wednesday, Tesla, Intel, Boeing. There's a bunch of them. I think Wednesday is probably going to be the most material day, and we'll have the Microsoft report coming into the markets on Wednesday morning, because it will be out after the close. So that effect, whatever that is, will be playing out. And then on Thursday after the close, we have Apple, Visa, MasterCard, bunch of retail type stuff coming out there. And then on Friday, there's 25 reports coming out, and nothing really material. Chevron is coming out, so there'll be a couple other oil service companies as well. But overall, the earnings is going to start to stack up and have more impact. And I think the forward-looking comments are what we're going to want to pay attention to. And that's going to give us a feel for what is going on as far as the expectations from a lot of these companies. And I think folks are getting a little hesitant, mainly because of the expectation of the Fed raising rates and cutting back on the stimulus, and maybe even downsizing the balance sheet, which may or may not happen. If you remember going back to Bernanke, he told us that he was going to get it back under $1 trillion, and we're a little ways away from that, closer at $9 trillion, right? So that's not going to happen. I don't see any material change in the balance sheet there at all. And on the other side, just on the spending side, as far as Build Back Better and some of these bills that are out there, that's not happening either. Let's face it, that thing is dead for the most part. Even if they try to parse it up and pass it, it's going to be really, really difficult to get anything through in Congress right now, especially, like I've said before, and we get to every week that we go by and we get one step closer to the elections, that's going to just, you can forget about probably anything happening from there. And it's possible, the way things are looking, like maybe there'll be a shift and Biden will be a lame duck come this time next year. So we'll see what happens. But there not a lot of consensus for it to stay like it is. It looks like everybody's thinking that we're going to see a shift in the power in the Senate and possibly the House as well. So that's going to continue to affect sentiment as we go forward, and folks are not going to be looking at a lot of the stimulus type talk. Let's go ahead and get into the database, see if we can get through this pretty quick since we got a late start here tonight. Let's see if I can get through this. So as we start to look at some of the things that are coming in as far as the database goes, as I expected, we saw quite a few selling coming into the weekly models. And they are at 16.81% bullish. So we had 3,994 sell signals, only 144 buy signals. So it's a huge negative rotation, pushing the weekly down to 16%. And that's just tells us that there's going to be a lot of work trading in a sideways range for probably a minimum of 6 to 8 weeks, even if we stabilize prices right where we are right now. And actually, I said this was the weekly. This is the daily that I have up here. I just noticed that these are the daily stats. Let me flip over to the weekly, and the weekly is at 17.48. They're very similar, and they've been running neck and neck like this for the last several weeks. But that was the numbers that I gave you were right as far as the buys and sells, but the percentage was a little bit off. But so this is really where we are from the standpoint of the buys and sells. On the daily we're a little less, but there were 1,938 sell signals versus only 184 buys, even on the short term. So that close that we watched on Friday was pretty ugly. That was an ugly close. So we, like I said, we closed under the 200-day. The 200-day moving average on the S&P is still rising, so there's still some upward pressure there. So I'll set up here in the technicals here in just a minute what we're going to look like. But as far as the database goes, this is what I'll be watching for as we trade for the next 6 sessions. So as I mentioned in the opening comments, we have six trading days left in this month, and that next Monday will be the monthly close. And I believe that's going to be one of the more significant closes that we're going to have probably this year, and may actually suggest that there's something really big happening. And like I said, I'll put that in a separate videos out there. So let's go ahead and start to look into the, the futures here. Futures are up 32 handles right now, 42.22. It's interesting. We traded early, right out of the box. We opened higher and it traded up, and it was trading up and really strange just watching the market trade. There were a lot of air pockets. It's pretty thinly traded in that first hour, but we definitely saw some moving up pretty good. We're now up to the 24 handle. So far, the high overnight's been 44.27.50, and if we look at the market grid here, let me bring that up for you. R1 was 44.17, R2 is 44.48, S1 is 43.62. I don't think we're going to see anything like that. In fact, we'll be lucky if we see a print that is much lower than what we've already seen overnight. 43.86 was the low so far. So I don't see us making a new low, but the action that we've seen over the past several days has been where we get this early rally, and it's almost like the markets are getting way ahead of themselves overnight, and then they get knocked back down, and depending on what kind of flow we get out of the open in the U.S. in the morning will tell us a little bit more. But it looks to me possibility of S1, R2 in the range, but I think we may have already printed the low, and that pattern is not likely to change. So we should see probably a 2 to 3 day stabilization here in the markets, and that'll just map out really closely to what's going on with the Fed and the meeting and on Wednesday. And obviously I'll be updating that as we go through the week. Let's go to the SPX. As I mentioned, SPX closed under the 200-day moving average. We should rebound. We're looking at maybe an R2 there. Up to 48 is the number there as well. This is the cash. Let's go to the weekly, because that's one of the charts we're going to need to watch fairly close this week. Now, we did get an STX buy signal weekly. That suggests that we should trade toward 44.40 to 44.91. So it's likely to trade back toward potentially the 45 handle. We'll get a better feel for this probably by Tuesday's close, at least how the cash flow is going to go. But we're looking at the PPMs are all down big numbers. In fact, last week the high was right on the 10-period moving average. The high was 46.32, 46.39 was the 10-week moving average. And that is starting to accelerate right now. So we're seeing potential for that to be around 46.20, and that'll be your major resistance, but that's not in play in the current configuration right now. Let's go over to the Nasdaq, and we'll go top down there. We'll start with the weekly. Nasdaq 40-period moving average is still slightly up, and that would suggest on a weekly basis we could get back toward an R2 14,952. Right now we got a high of 14,582, but I think during the week we're likely to see it trade back toward that 40-day moving average. We also got, this is a weekly now, so we got an STX buy weekly, so look for it to move back toward that 40-week moving average. Let's go over to the day, and we'll set up the daily range for tonight and overnight. Same thing here, 14,677 is R2, S1 14,308. So that looks like that should be your range coming into tomorrow. Russell had just a really ugly day. We actually traded below Fibonacci numbers. This is the daily Russell. It finished at 1987. We got huge momentum on the downside on this market, just looking like it's going to continue lower. The but all of these markets, and I mentioned this on Friday's stream, that we're getting STX buy signals. So probably 1 to 2 weeks sideways, we should see a stabilization here. So probably the worst of that decline we've already seen printing into the hole on Friday on the close. So we'll see what happens here. I don't think that Powell's going to say anything stupid as we come into Wednesday, but I do expect this downward momentum that's building here is huge. So as far as any abrupt turnaround and markets starting to reverse and bottom here instantly and just trade back up, that's not in the cards on any of these markets. So as we just come up here, I'm going to cover the 10-year crude oil, gold, and Bitcoin. And Bitcoin, by the way, if I'm sure you've been paying attention, has come down to some of the minimum areas I've talked about. It did trade down to the 34,000 handle. So I'll cover that at the end of the show here. So let's go ahead and get into the 10-year and also take a look at the yield curve. We'll start with the weekly chart here, and the weekly chart suggests that we are trading right along the 200-week average, which right now is at 1.78. We got a little bit above that, but we're trading right into it, 1.74.7, which is basically 175. As far as when we go to this coming week, we're looking at the S1 at 170, we'll call it 171, and R1 178, but I'm looking at maybe a potential for this to just start to rebound. I don't know that we'll see the 171 level, but looks like 178 to 183 will be the upside for this week. I expect them to, the 10-year to recover a bit there. Let's take a quick look at the yield curve. And I always talk about the 530s, and 530s are one of the main trading spreads that is done internally at banks, mainly because it mimics a lot of the structure of a lot of lending that they do. And we're seeing this move down to 51 basis points. I'm just going to bring up a monthly graph here because I think this is an interesting graph here. We go back to 2006, prior to we'll call it 07, 08 debacle. It was interesting. We had a negative. The 5-year was higher than the 10-year, so we had an inverted yield curve suggesting that we were going to see a recession, and then we went from that to a steepening curve, which is typical when you start these recessions. So what we're looking at now, this is going back to, I believe, around 2002, this screen here. And what we're looking at now is we are trading right now below the pre-pandemic levels we were at. And this price right here is a 2018 level. So if we started to take out 2018, that would be a real concern from my viewpoint. And that's what I'm watching right now, just to see how this unfolds over the next several months. This is a monthly chart, so we're going to be watching this for the next couple quarters, and we'd have to get well above probably 0.75, maybe even 0.8 to even have a chance at reversing this spread. All right, so let's go to crude oil. Crude oil is continuing to be pretty solid here. We're at 85.75. For the week, this is a weekly graph. We still have like great momentum on the upside. 1.42, 1.21, 0.95 on ppm 1, 2, and 3. This is very bullish from an intermediate level. We did hit some of the intermediate targets, which was at 86.16. We traded all the way up to 87.10 last week. I believe we'll stay in a sideways range for a couple weeks, probably staying between S2 82 and not getting much above that 87.10 level, maybe printing R2, but I think R1 86.49, we're getting close to that level, to the possibilities of an S2 82.28, and this is on a weekly level. But this momentum that's in this uptrend is substantial and is not going away anytime soon. Next market I'll cover is gold. Gold managed to get a close above the 33 level. Last Friday we closed at, actually we closed at 31.80. I was looking at this earlier, and I was looking at the current price. So we didn't quite get the close above there. We're right at it. We're continuing to hover around that. So it's not that critical, but one of the things that is happening, we're getting a cycle coming in this week, and I believe this is going to be a cycle low. And maybe with those PCE numbers coming out on Friday, that will be something that we can look at from that standpoint, just to look for some type of close. We're going to have to get a close basis the pattern above 1842 this week, and that's not much. That's $7 from where we're trading right now. But this is a bullish configuration. We're finally seeing the PPM1 turn up. It's still negative, but at least it's starting to turn up. I've been talking about this for a few weeks. It's going to take 2 weeks to stay above this 33 level to start to turn these indicators up and get enough momentum that we can move higher in this pattern. Okay, so the final market I'll cover tonight is Bitcoin. Bitcoin is trading down below its STX number. That number is 36,631. Last trade 35,246. So far 34,649 has been the low. If we look at the Fibonacci targets that I talked about last week, 34,090 and then 28,135 are the next objectives on the downside. This is the weekly chart. So if we go over to the daily, you'll see something very similar. Current downside targets right now are 32,042 and then 27,309. So there's a number of things looking like 34, 32 range with potential between 28 and 27 on the downside. Momentum is ridiculously weak, pushing these prices down and not likely to get through anything and any of the resistance that's out there right now. So if we go back just a couple of days ago, we traded up to 43,000. So we're just about 10,000 off of that high, and that this momentum is substantial, as I said. So continue to be cautious. I don't see turnaround in Bitcoin for a little bit. I think you're going to have to structure out some kind of price low to make this thing work at all. And I think it'll be probably, I'm not even going to guess. It's going to take multiple weeks to set up a bottom. And like I said, if we continue to see kind of a risk off trade, this market once upon a time, if you recall, was being basically promoted as, like some kind of alternative asset to the stock market. Well, it's a risk on, risk off asset, and it's become quite clear. And there will be a great buy on this market, but it's been damaged pretty bad, 45 to 55% declines off the highs. It's not a pretty sight, and I don't see any reason to be rushing back into this right now. So anyway, this will do the show for tonight. Apologize for the late start. Sorry about the sound. So make sure you like and subscribe these videos, and I will see you tomorrow night. Those of you in the live trading room, see you at 1 p.m. Eastern. Thank you, everyone. See you tomorrow night.